So we've completed 5.1 and 5.2. We've now got to move on to 5.3, and that is the cash effects of financing activities section of the cash flow statement. Firstly, we've got to know what must come into the financing activities note, because there's nothing printed on the answer sheet. So I must know what makes up financing activities. Financing, where do we get money from? Who's financing us? The big thing is shares. So it would be the shares that we issue less any buyback of shares. So it has to do with the two items for shares, and the third thing would be if we increased our loan or if we paid some of our loan. So it's the three items would be the issue of shares, and the buyback of shares, and then a change in loan. So the last one is the change in our loan. So if we know that that is what we need to go and look for, it makes it a bit easier. So let's go and see first of all shares that were issued. Now, if I go to the information, they just tell me they had authorized share capital of 1 million shares on the 1st of March, the beginning of our year. There were 500,000 shares in issue, and they also issued a further 200,000. So they did issue shares, but I don't know for what value. I'm not interested in the number, I'm interested in the value. So how will I get to the value? Because that is the only thing they tell me. And if I go to the balances up at the top, I've got ordinary share capital total balances at the beginning and at the end of the year. So the only way I can do it is to fall back to my financial or my balance sheet note for ordinary share capital. So let's just go and see what that note looks like. The ordinary share capital note, basically, it starts by, on the left-hand side, we've got the number of shares for the cash flow statement. I'm not really interested in that. And on the right-hand side, I've got the values. I've got a balance at the beginning, plus then whatever I issued during the year, minus the average price of whatever I repurchased, and that would give me the balance at the end of the year. So let's see. I'm now trying to figure out the shares issued during the year. So I must try and find those figures. I've got the balance at the end and the balance at the beginning. Balance at the beginning was 3 million. And the balance at the end was 4,117,500. 4,117,500. So those two I've got. If I've got them, and I can maybe put in the repurchase or the buyback of shares, I may be able to work out the issued. What do they give us about the buyback? They tell me on the 28th of February, 25,000 shares were repurchased from a deceased estate at R6.30 in total per share. And be careful, when we do the ordinary share capital note, we want the average price. Because just after that, they tell me what the average price is. It was R6.20. So the amount that go to the ordinary share capital note for the balance sheet is the R6.20. So it's the 25,000 shares at R6.20 per share. Okay, so the average, so it's 25,000 shares times R6.10, the average price. So if I do that calculation, it will give me a value of 152,500. Important, minus, because it makes the amount less. Well, the number of shares now in issue becomes less. So now I can work back to get to my shares issued during the year. Start by taking the balance at the end, 4,117,500, and then do the opposite, minus 3 million plus 152,500. So it's 4,117,000 plus 152,500 minus 300,000. Just quickly work it out. Minus that gives me 1,270,000. So my shares issued 1,270,000. So I can go back to my note. I must now just somehow show what I did. I took 3 million, or let's start by putting in the balance at the end. I took 4,117,500, is it? Yes, 500. From that, I minus the 3 million from the beginning, and I plus the 152,500. I can also show how I got to the 152 by 25,000 times 6 rand 10, and that then gave me the figure of 1,270,000. If I issue shares, it's like selling shares. I'm going to receive money, so it's money coming in. If I buy back, I pay for them, so it's money going out. Be careful on the cash flow statement. When we do the financing activities, the buyback of shares, we're simply interested in what we paid. Nothing to do with average or above average. So this is a combination of whatever we paid. So we are simply going to look for the payment. And if I go back to the information, we paid 6 rand 30. So I'm not interested in the average. I paid 6 rand 50. So 6 rand 30. So it's 25,000 times 6 rand 30 times 6 rand 30. And that would give me pay, money going out. So it's minus 157,500. So just important on the cash flow statement, financing activities, not like on the financial statements here. I'm interested in the total. Change in loan, fairly straightforward. I must just go and look for the loan amount for last year and for this year, and then figure out what the difference is and if it was money coming in or out. Remember, a loan is a non-current liability, so it will be under the non-current liabilities. Last year's was 1.3 million. This year it's 750,000. So last year it was 1,300,000. And this year it is 750,000. So it got less. It was more last year. It was 1.3 million, and it came down to 750. If it gets less, how will it get less? We have to pay for our loan to get less. So if we paid more money in, it's money going out. So it is an outflow, and the difference is 550,000. Good, so all that remains now is to put the total in. See, it's in a block. If it's in a block, total must come above, at the top of the block. So I must simply take 1,270,000 minus 157,500 minus 550 and put the answer at the top, and that is 562,500 positive. And that is basically all the questions to do with the cash flow. The next ones are with an analysis, which we will do at a later stage.